Greetings, colleagues, stakeholders, and members of the profession. It is a pleasure to welcome you to today's launch webinar on the IRBA's adoption of international standards on sustainability assurance and ethics. My name is Ian Mtecha, and I'm a professional manager within the standards department at the IRBA. This webinar marks an important milestone for the South African auditing profession and for the broader corporate reporting ecosystem. It reflects the IRBA's continued commitment to protecting the public interest and to strengthening confidence in sustainability-related information that is relied upon by investors, regulators, and society more broadly. Before we begin, I would like to take a few moments to outline the house rules for today's session, please. Certain of the sessions will include a dedicated Q&A segment. During those sessions, questions may be submitted via the chat function. Even where a session does not have a formal Q&A segment, participants are welcome to post questions in the chat throughout the webinar. Presenters and panelists will respond to questions in the chat following their respective sessions where time permits. The agenda for today's webinar will guide the flow of the session and is displayed on the screen. I also invite you, if you have not already done so, to briefly introduce yourself in the chat by indicating the organization you are joining from, as well as what you are hoping to get out of today's webinar. As you can see from the agenda, we will begin with a global perspective on ethics and sustainability through the IRBA sustainability standards, followed by an address from the IRBA CEO, Imre Nagy. After a short comfort break, we will hear practitioner and preparer perspectives, and then we will conclude the technical program with an update from the IRBA on sustainability assurance and the ISSA 5000. My colleague Liesl, who leads our work on ethics, will guide us through the first part of the program up to the comfort break. I will then join you later in the session. Liesl, over to you, please.
Thank you very much, Ian, and a good afternoon to everyone. I've had the privilege of working very closely on the adoption of the ethics standards for sustainability assurance in South Africa as supporting standard setter of the IRBA's Committee for Auditor Ethics. So it's particularly meaningful to me to be part of this session today. My role here today is really just to take you through the first part of the program, and from there to also introduce to you our speakers from the International Ethics Standards Board for Accountants. Ethics is fundamental to assurance, equally so for sustainability assurance, given that sustainability information frequently involves subjective assessments and projections. Trust in this context relies substantially on the practitioner's professional integrity, objectivity, and sound judgment. We are therefore especially honored to be joined by our team from the IRBA, who were at the forefront of developing the international ethics and independent standards for sustainability assurance. I'd like to welcome the three presenters, starting with Laura Leal. Laura is a principal at the IRBA. She's closely involved in the rollout of the sustainability ethics standards, as well as the board's broader work on firm culture and governance. And she brings strong regulatory and legal experience from her time as legal advisor at the Portuguese Securities Market Commission, contributing to regulatory policy, international affairs, and corporate governance initiatives. Next, Sylvia Stramko, also a principal at the IRBA, and she has played a central role in developing the ethics and independent standards for sustainability assurance. Sylvia brings deep audit oversight and regulatory experience from her time as deputy head at the Auditors Public Oversight Authority in Hungary and her experience at the Ministry for National Economy on the EU's accounting and audit legislation. And finally, it's a great honor to introduce Gabriela Diaz, Chair of the IRBA and co-CEO of the International Foundation for Ethics and Audit, who will be our keynote speaker for the session. Gabriela has held senior roles in securities regulation in Portugal and internationally, focusing on sustainability, corporate governance, and the public interest. She helped found the Portuguese Corporate Governance Institute, served as president of Coimbra University, and has published extensively on sustainability, finance, auditing, and governance. As IRBA chair, she has been a driving force behind establishing the global ethics benchmark for sustainability reporting and assurance. Before I hand over to Gabriela, I'd like to say that it's been a real privilege for us at the IRBA to engage with the IRBA throughout the development and adoption of these standards, and we've benefited greatly from this collaboration. With this, I'll hand over to you and your team, Gabriela, to take us through the global ethics benchmark for sustainability reporting and assurance.
Good afternoon, everyone. Thank you very much, Liesel, and thank you, everyone, for the opportunity to address this very esteemed audience. I'd like to start by greeting, of course, the ones who made this seminar possible, mainly Jan Tegger and you, Liesel Dupre, but also Sadia Adam, who is a member of the IRBA, a very esteemed and collaborative member of the IRBA, and of course, President Chair Imre Nagy, for allowing me to address this audience. Thank you very much. It's a real pleasure to join you today for this very important seminar hosted by the IRBA to celebrate the adoption of the IRBA sustainability standards. I couldn't be happier. Let me start by warmly congratulating the Independent Regulatory Board for Auditors and the entire South African community for this important milestone. It's a privilege and it's a pleasure, a real pleasure to be here today addressing you. And for many reasons, and one of the reasons is that historically, IRBA has been one of the fastest jurisdictions in adopting the IRBA standards, the international standards more broadly, including the IRBA Code and its related materials, provisions, etc. And this long-time standing commitment and this long-time collaboration, long-standing collaboration reflects the IRBA strong dedication and commitment to promoting high-quality ethical practices, to strengthen public trust in the profession, and to support globally consistent standards in the public interest. This time, with the adoption of the sustainability standards, both the ethics standards and the audit and assurance standards, IRBA has once again demonstrated strong leadership as a fast mover in advancing high-quality international ethics standards in the public interest. Actually, I must say that South Africa has been one of the first, I think the first, but I don't want to make any mistake, but was probably the first jurisdiction adopting the IRBA standards. Your decision here in South Africa to adopt the IRBA sustainability standards sends a very strong and very timely signal, both in South Africa and internationally, about the importance of adopting the importance of ethics and independence in sustainability reporting and assurance. Like Liesel had the opportunity to mention, ethics and independence are extremely important in supporting sustainability reporting and sustainability assurance. Over time, as I started by mentioning, the IRBA has also been a trusted partner of the IRBA in many ways. Beyond adopting the standards timely, very timely all the time, IRBA has actively contributed to their development through engagement in consultations, technical discussions, and other very important collaborative efforts, namely by having board members at the IRBA representing South Africa, or coming from South Africa, and collaborating in both ways, by helping the development of the standards and by bringing back all the knowledge and commitment to adopt and implement the standards. So it has been a perfect win-win collaboration between IRBA and the IRBA over time, where I must say Sadia Adam more recently, over the last 5 years, has played a critical key role by participating in many task forces, leading some projects, collaborating in very many ways, and being today one of the probably one of the most contributing elements, one of the most contributing members of the IRBA. She's not only a member of the board, but she's a member of some projects specifically, and a member of the planning committee, which is kind of the executive small team of the IRBA board. This ongoing participation, collaboration, and partnership has very much helped strengthen the quality, the relevance, and the global applicability of the IRBA standards. So I'm really grateful to Sadia, of course, to IRBA, to South Africa for this very, very fruitful, rich collaboration over time between the IRBA and yourself. The adoption of the IRBA sustainability standards is a very significant step forward. Sustainability information is becoming increasingly central to decision-making by investors, by regulators, by the public, and it's central to the trust in that information, in sustainability information. Ethics and independence are the foundation of that trust. So this adoption of the IRBA standards are really a significant step forward and a strong message to everyone about the importance of these standards. The new standards, the new sustainability standards, provide a globally consistent ethical framework for sustainability reporting and for sustainability assurance engagements. So it covers all the infrastructure. And together with IRBA standards, audit assurance standards, and with the sustainability reporting standards, whatever framework is adopted, the IRBA ethics and independence standards complete the infrastructure, support the appropriate application of the reporting and assurance standards, and protects the trust in the whole infrastructure of standards and what results from these standards. These ethics and independence standards reinforce core principles which are vital for the trust in the standards, such as integrity, such as objectivity, professional competence, due care, confidentiality, and professional behavior. And they translate those principles into clear requirements and guidance for professionals involved in sustainability reporting and assurance. It's about how these professionals prepare sustainability information and work on sustainability assurance engagements. It's part of this infrastructure, which is formed by the sustainability reporting standards and the assurance standards. It's about what you have to report, when you have to report, and etc. The IRBA standards, the ethics and independence standards, it's about how to behave in face of some ethical dilemmas or ethical issues, and how to solve some independence issues that arise when you are preparing or assuring sustainability information. If anything, they are about fighting greenwashing. These standards establish a strong and comprehensive independence framework for sustainability assurance engagements. Independence is not simply or not only a technical requirement, it is fundamental for credibility and quality of the information and of the assurance engagements. Without independence, there can be no confidence in assurance. But very important, adoption, which you are celebrating today, and I want to celebrate with you, it's an important step, but it's only the first step. What will truly matter is effective and consistent implementation. In an area as global and as interconnected as sustainability reporting and assurance, the fragmentation of ethical and independence requirements would undermine trust and create unnecessary complexity for practitioners and firms operating across jurisdictions. So the adoption is the first step. Implementation, effective implementation, is even more important. I am fully confident that this will be a successful path for the IRBA and South Africa based on what we have seen before with other standards. South Africa and IRBA, very importantly, have been moving fast, timely, boldly in adopting international standards, but it's impressive the way South Africa and IRBA in particular focus on effective implementation. This is something that makes me very confident about what's going to follow this adoption. And it's something that we at the IRBA will be observing from very close and very interested in understanding, because we have something to learn also from the experience of South Africa the experience of IRBA with implementation of the standards. Global adoption and coordinated implementation are very important, and when jurisdictions move in alignment, as South Africa has done, they help build a coherent global system that supports high-quality reporting, credible assurance, and ultimately better decision-making. At IRBA, we are fully committed to supporting jurisdictions and stakeholders in this implementation journey. And because of that, two important initiatives in particular are worth highlighting. First, the IRBA has created an adoption and implementation program focused on supporting regulators, professional bodies, firms, and any other stakeholders as they incorporate the standards into their frameworks and their practices. We want to support jurisdictions. We are developing guidance, engaging with jurisdictions around the world, and working closely with partners such as IFAC and others, and national regulators to promote consistent application globally. So this is a message for you as well. Of course, given the connections and the partnerships between the IRBA and IRBA, of course, you know you can count on us, but I want to reinforce that message that we are here ready to support what's coming next, which is this journey of effective implementation of the standards. Secondly, we have established a so-called Implementation Monitoring Advisory Group, or IMAG, and these groups will help gather feedback from stakeholders globally on how the sustainability standards are being implemented in practice, will help identify emerging issues or any fatal flaws, if there are any, and ensure that the standards continue to work effectively in real-world settings. These two initiatives are pretty innovative compared to what the IRBA has done before, but given the newness of these standards on the one hand and how the world is evolving, we are also wanting to refresh our approach to the support we provide to our stakeholders and move a little bit further with respect to adoption and implementation. This specific group that we have created, the Implementation Monitoring Advisory Group, is specifically focused on receiving early information about how the standards are being implemented and make ourselves useful and helpful in case there are some obstacles, some difficulties, or some uncertainties faced by the ones who are keeping their hands dirty with implementing and using these standards. So we hope this is very early days, because just like IRBA has just a few months ago adopted the sustainability standards, other jurisdictions are following. I think that we have now 7 or 8 jurisdictions which have already adopted the standards, but of course the information will start coming a little bit later, even if this group has been working since already the adoption of the standard, the approval of the standards. This means that we will have a very direct and open channel to the practitioners, mostly, to understand how this is going and if there is anything that we should do well before we do a post-implementation review, which will happen a few years later. So together, these efforts that we have been doing are intended to help ensure that the promise of the standards, stronger ethics, stronger independence, and greater trust in sustainability information is fully realized and achieved. Let me close by again congratulating IRBA for its leadership and for organizing today's event. Your proactive adoption of the IRBA sustainability standards sets a very important example and contributes to building a consistent and trusted global framework for sustainability reporting and assurance. We look forward to continuing our close collaboration with IRBA and with you all as we move from adoption to effective implementation. Thank you so very much to all of you, and I wish you a great seminar today. And with this, I will hand over to Laura Leal, who is going to present a little bit together with Sylvia, both from my team, about what these standards are. And of course, after you have adopted them, you know them, but they want to give you a little bit more flavor about the details of the standards and get ready for your questions. Thank you very much and have a good day.
Thank you, Gabriela. I just wanted to say hi to everyone and a big thank you to IRBA for inviting us to be here today. Sylvia and I are thrilled with the opportunity to engage with all of you on this subject, and we will walk you through the most relevant topics in the sustainability standards that were approved and issued by IRBA. We will also have some time at the end of our presentation for any questions you might have. And so if we could go please to the next slide. One of the principles that guides the IRBA's activities is that ethics is a means to an end. And this is to contribute and to rebuild trust and confidence in businesses and in markets, and also to support well-functioning economies and societies. What does this mean for sustainability? Well, it means fostering the right behaviors and the right actions from those who are preparing information and also from those who are providing assurance on it, so that the users of the information can make informed investment decisions. We have seen increasing demand in the past few years for sustainability information to support capital allocation by investors and other stakeholders. Accordingly, we have also observed on the one hand, companies which are making available great amounts of information on how their activities meet sustainability goals. And on the other hand, we're also seeing regulatory and standard-setting developments in the sustainability space to make sure that companies disclose quality sustainability information. And this was the case, for instance, with the development of global and regional sustainability reporting frameworks, for instance, the IFRS International Sustainability Standards Board standards, and also the European Sustainability Reporting Standards. And these rapid regulatory developments aim to respond to the fact that sustainability reporting is an area that is still maturing, where the collection and the treatment of sustainability information might create unique ethics risks, including fraud, for example, greenwashing, or error. And so there has been a pressing public interest to ensure that sustainability information is trustworthy, it's comparable, and therefore it's capable of being subject to assurance. Independent assurance is a fundamental aspect of credible sustainability disclosures. Whilst sustainability reporting and assurance standards might be technically very strong, the reality is that such standards are applied in real-life situations by people who might be subject to bias or conflicts of interests or pressure, and this represents the added value of having the IRBA ethics standards. And so if we can go on the next slide, it is IRBA's conviction that the sustainability standards infrastructure cannot be complete, operable, or effective without a robust complement of ethics and independent standards that underpin the reporting and the assurance frameworks. So if we look at the image on the left-hand side of the slide, we see that the global sustainability reporting assurance and ethics ecosystem consists of a trilogy of standards. On the one hand, we have the reporting standards, which provide a standardized approach to reporting reliable and comparable information. I've talked about some examples already. The European standards, the ISSB standards are examples of reporting standards. On the other hand, we have assurance standards, which provide a standardized approach for assurance to increase credibility and trustworthiness of the sustainability information. And an example of this is the IAASB's ISA 5000. And in respect to the standard, it is worth noting that the IRBA ensured the interoperability of the ethics standards with ISA 5000 while still remaining flexible and framework neutral. And then we have the ethics and the independent standards, which focus on fostering the right behaviors and the right actions to ensure that sustainability information is trustworthy and not misleading. And this picture shows that ethics is the framework that wraps the other two because the IRBA standards ensure that the application of the reporting and assurance standard is not hindered by biases or pressure or conflicts of interest or other ethical issues. The IRBA developed or used a multiple-pronged approach with regards to sustainability. We developed ethics standards for sustainability reporting and assurance. And then there's another IRBA project that complements the sustainability standards, which is the project on using the work of an external expert. And this project complements both the reporting and the assurance standards, as well as other professional activities undertaken by professional accountants when using an expert. And due to the wide-ranging areas that are covered by sustainability and the detailed technical knowledge that is necessary in these areas, assurance practitioners might need often to involve external experts in those fields. So let's look now on the next slide at the sustainability reporting standards, and then move on to the sustainability assurance standards. So what are the key characteristics of the IRBA sustainability reporting revisions? Well, firstly, the revisions build on the code's existing robust provisions. They maintain coherence with the overall code. They recognize the existing robust ethics standards that are relevant to both financial reporting and sustainability reporting. These revisions and examples were added to the code, and they aim to ensure that parts 1 to 3 of the code more robustly support trustworthy sustainability reporting. Secondly, the new material is specific to sustainability to enhance the code, to ensure that it is fit for purpose for sustainability reporting. In third place, whilst these revisions were developed within the code and therefore apply to accountants, they can also be used by preparers of sustainability information who are not accountants. And this is because the IRBA found when developing its strategy and work plan for 2024-2027 that there is a public expectation that all preparers of sustainability information, including those outside the accounting profession, are subject to the same high ethical standards. And this is to ensure, of course, a level playing field. And finally, the revisions align with the current focus of the code to be framework neutral, meaning that they are interoperable with any sustainability reporting framework, including those developed by the ISSB, the European Union, and the Global Reporting Initiative. So moving on to the next slide and to the sustainability assurance standards. The ISA was developed to be used by all those that are providing sustainability assurance, regardless of their professional background. This means accountants and other professionals, like I mentioned. In January 2025, the IRBA and the IAASB had a joint launch of their respective standards, recognizing a unified global approach to address the growing demand for trustworthy sustainability information. The IRBA Sustainability Project was developed in close coordination with the IAASB Sustainability Project. And in this regard, there was a full dedication and responsiveness of both boards to calls from stakeholders and the Public Interest Oversight Board, the PIOB, for robust coordination. This includes, for instance, common definitions, and the approach to group sustainability assurance engagements, the effective dates, and other situations. As part of the launch, the IRBA issued fact sheets on sustainability reporting, on the ISA, on the use of experts, together with a joint fact sheet from the IRBA and the IAASB. It's worth noting that the IRBA has been publishing additional implementation support material as time goes on to support jurisdictions on their adoption and implementation efforts. And then, so moving on to the next slide, please. Let me just walk very quickly through the key characteristics of the ISA. So you can see here 4 essential main characteristics. The first one is the equivalency to the ethics and independence standards for audit engagements. And so recognizing the public interest in sustainability, the IRBA held to the premise that sustainability assurance engagements on sustainability information must be underpinned by the same high standards of ethical behavior and independence that apply to audits of financial statements. And with this in mind, the IRBA developed the ISA to mirror and to be equivalent to standards that apply to audit engagements. This means parts 1 to 4A of the code, with certain limited exceptions. The second characteristic is being a standalone part. This means that the ISA is housed in a separate new part of the code, and the standalone approach makes it easier for those who might not be familiar with the code to find all provisions applicable to sustainability assurance in the same place. And in addition, Part 5 is still part of the code, and this shows that the ISA lies on the same robust ethical principles that the IRBA code represents. Moving on to the profession agnostic characteristic, this means that the IRBA recognized that sustainability assurance engagements have been historically provided by assurance practitioners from all kinds of professions, for example, engineers or lawyers, and it is in the remit of the local laws and the local bodies to determine who is allowed to provide sustainability assurance engagements. Nevertheless, the ISA is able to be applied to all sustainability assurance practitioners who carry out a sustainability assurance engagement, irrespective of their profession. The standards were developed in a way that is meant to be understood and applied by all practitioners by using neutral and sustainability-specific terms. While developing these standards, the IRBA put great emphasis on getting input as well from all kinds of practitioners, not only accountants, on the operability of these standards. And then the last characteristic, it's being framework neutral. So similar to the reporting revisions, the ISA was also developed in a framework neutral way so that the ethics and independent standards can underpin any reporting or assurance framework that has been used to prepare or assure the sustainability information. And I will now hand it off to Sylvia for an overview of the scope and other characteristics of the ISA.
Thank you very much and welcome everyone. If you can go to, yes, this is the slide. Through the next couple of slides, let me provide a high-level overview of the key technical details of the ISA. The ISA consists of an ethics and an independent standard. And the ethics standards set out the fundamental principles and the framework for expected behavior for sustainability assurance practitioners. Those standards apply to all sustainability assurance engagements, irrespective of the type of the assurance, whether if it's a reasonable or limited assurance, or the professional background of the sustainability assurance practitioner. In addition, the board was of the view that adhering to high standards of ethical behavior only where performing these sustainability assurance engagements for the client might not sufficiently safeguard stakeholders' confidence in the practitioner and in the public interest at large. Therefore, the IRBA believed that it would be important to hold the practitioner to the same high ethics standards of ethical behavior with respect to any other professional services they might provide to the same client, not just these specific assurance engagements. Therefore, the ethics provision in ISA apply not only to the sustainability assurance engagement, but also to any other professional services the sustainability assurance practitioner provides to the same client. On the other hand, with respect to the independent standards in the ISA, the IRBA agreed to a proportionate approach. The board believed that requiring the application of independence provisions that are equivalent to the audit engagements to all sustainability assurance engagements would not be proportionate, would create too much burden, especially for smaller firms. Therefore, the independent standards in the ISA in Part 5 focus only on sustainability assurance engagement with the same level of public interest as audit of financial statements. So these are sustainability assurance engagements where the sustainability information is developed in accordance with the general purpose framework as criteria 1. And secondly, the sustainability information is required by law or regulation or otherwise publicly disclosed to support decision-making by investors or other users. We recognize that As a first sight, this criteria seems a bit difficult, but we really welcome the national standard setters like IRBA, who provides additional information to help practitioners and firms work with this scoping issue. But by the way, this approach, these dual independence requirements, is in line with the extent code that already provides different independent standards for audit and review engagements in Part 4A. And for assurance engagements other than audit and review engagements, the independent standards are set out in the different standards in Part 4B. And this dual approach doesn't mean that the IRBA code would not provide independence provisions in the context of other sustainability assurance engagements, such as sustainability assurance engagements where the sustainability information was developed in accordance with a special purpose framework. For example, reports that was developed for the regulators or for the management only, so not for the public. In the case of these other sustainability assurance engagements, the independent standards in Part 4B in the extent code that is applicable to assurance engagements other than audit and review engagements continues to apply to professional accountants. And if the sustainability assurance practitioner is not a professional accountant, they are also encouraged to comply with the independent standards in Part 4B. If we can go to the next slide, please. As Laura mentioned before, one of the key objectives of IRBA was that the same robust ethics and independence requirements should underpin sustainability assurance engagements that are currently applied to audit of financial statements. Therefore, the IRBA was developed to mirror and to be equivalent with certain but limited exceptions to the provisions in the extent code in parts 1 to 4A in the code that currently apply to audit engagements. Accordingly, the relationships, interests, and circumstances that might create a threat to compliance with the fundamental principles in the context of an audit engagement, those also create threats in the context of a sustainability assurance engagement. For example, conflict of interest, financial interest in the client, business relationship with the client, or providing non-assurance services to the client. But beyond that, the IRBA also acknowledges the specific characteristics of sustainability assurance engagement. And these slides really present what are the key conceptual differences between the provisions in the IRBA and the extant provisions in the IRBA codes that apply currently to the audit engagement. One of the reasons for these differences between these two standards goes back to the subject matter of the engagement. Given the different nature of sustainability information compared to financial information, the IRBA included specific examples and guidance in the standards that are more relevant to sustainability assurance engagements. And in certain places, these differences are also reflected in the requirements. For example, unlike the audit of the financial statements, where the auditor expresses an opinion on the entirety of the client's financial statement, the sustainability assurance practitioner might only express an opinion on the sustainability information addressing a specific sustainability matter. For example, greenhouse gas emission, while the practitioner doesn't express an opinion on the diversity, equity, and inclusion matters. And the IRBA recognizes these differences and recognizes that providing, for example, non-assurance services to a sustainability assurance client might only create a threat to independence if it impacts the sustainability information in question, the sustainability information on which the firm expresses an opinion. In this example, the greenhouse gas emission. As a second point, the IRBA also addresses the potentially different reporting boundary in the case of sustainability assurance engagement, and recognizes that sustainability information may include information from the reporting entity's value chain outside of the financial reporting boundary, which could potentially also raise ethics and independence considerations. The ISA recognizes that practitioners often use, or sustainability assurance practitioners often use the assurance work of other practitioners outside of the firm who are not component practitioners, and the firm cannot be appropriately and sufficiently involved in their work. However, these practitioners have already carried out a work with respect to the sustainability information in question, and for cost efficiency or for other purposes, the sustainability assurance practitioner intends to use such work for the purposes of the engagement. In such cases, the practitioner can only use the work of that other practitioner if the firm meets the relevant ethical requirements, and these relevant ethical requirements are set out in the ISA. Finally, which I should have mentioned first because that's the first bullet point on the side, the ISA was developed in a profession agnostic way. So it could be used by all sustainability assurance practitioners, not only by professional accountants. And for that reason, for example, the standards use more neutral terms. As I could mention, like instead of partners or engagement partners, that is refers to the common structure in the accounting firm, the standards more agnostically refers to leaders. And these new, more neutral terms and definition have been closely coordinated with IRBA in the standards. And as I mentioned, these are only the conceptual differences, but the ISBA already developed a supporting material that is available on the website that highlights the key differences and also provides a markup version between the standards applicable to audit engagement and the new standards in the ISA. And if we can go to the next slide, please. I would also like to talk about and mention a couple of key topics in the international independent standards in the ISA. The independent standards in the ISA also follow and mirror the structure and the principles of the independent standards that apply to audit engagement in the extant Part 4A of the code. However, it includes some areas related to the specificities of the sustainability assurance engagement I just mentioned before. There are two sections in particular that include new elements. Section 5405 addresses the independence considerations in the case of group sustainability assurance engagements, namely engagement on sustainability information that includes the information of more than one entities or business units. And this information, this sustainability information might even be from different components. These components can be included in the reporting entity's financial statements, but they can also be in the entity's value chain. And in the case of a value chain component, the ISA recognizes the challenges related to obtaining information from the value chain, and also the distance between the reporting entity and the value chain component. Therefore, the ISA provides a pragmatic and a proportionate approach to the independence requirements that apply when the firm performs assurance work at a value chain component for the purposes of the engagement. Similarly, Section 5406 in ISA also sets out independence considerations when the firm uses the work of another practitioner. And as I mentioned before, the standards recognize that the firm cannot be involved in the assurance work of another practitioner, typically performed at if the assurance work typically performed at a value chain component. Therefore, the independent standards provide clear and more importantly, practical guidance how the sustainability assurance practitioner can confirm the independence of these other practitioners if they intend to use their work. Equivalent of the independent standards for audit engagement, the independent standards in the ISA also addresses a list of non-assurance services that could impact the practitioner's independence when provided to the assurance client. However, instead of the accounting and bookkeeping services, as in the case of the independent standards for audit engagement, the ISA more broadly covers sustainability data and information services as a non-assurance service. And this really reflects the different nature of the information on which the firm expresses an opinion. In addition, the ISA also covers, for example, advisory services or forward-looking information, recognizing that sustainability-related non-assurance services more often include or take into account assumptions about the future developments. And finally, the independent standards in the ISA also highlights and calls out the independence consideration that might arise when the same practitioner provides the sustainability assurance engagement and the audit engagement to the client, when the auditor is also the sustainability assurance practitioner. And if we can turn to the next slide, please. As mentioned at the beginning of the presentation, apart from the ethics standards for sustainability reporting and the new standards, the ISA, the ISBA also approved a new global ethical framework for using the work of external experts. Of course, the use of the external experts is not a new issue, it's not a new phenomenon. But due to the increased use of technology and the demand for sustainability information, the use of external experts has become even more relevant. And this new framework in the code was introduced in the context of all professional activities and services of professional accountants, not only in the context of sustainability assurance engagement, but given the nature of the sustainability assurance engagement, it plays a critical part in the ISA as well. And this framework, the framework for using the work of external experts, becomes operative when the professional accountant or professional accountants or sustainability assurance practitioners do not have sufficient expertise to perform the specific engagement, whether it is an audit engagement or sustainability assurance engagements on any other professional services, and they determine to use the work of an external expert to deliver the work needed for the accountants or the sustainability assurance practitioners' purposes. But what is new in this framework compared to the extent codes provision? First of all, the new provisions clarify the definition of expert and expertise, and they distinguish the work of experts from the work of other individuals or organizations providing information for general use. The framework also provides clear guidance for professional accountants and sustainability assurance practitioners when they evaluate whether to use the work of an external expert. And this guidance focuses on the expert's competencies, capabilities, and objectivity. The professional accountant or the sustainability assurance practitioner cannot use the work of an external expert if the experts do not meet the competence, capabilities, or objectivity requirements, or they cannot use their work if the practitioner cannot determine whether they would meet these requirements at all. And in the case of audit and assurance engagement, recognizing the heightened public expectation concerning such engagements, there are additional objectivity requirements for the evaluation of interest, relationship, and circumstances based on independence attributes. For example, the expert's financial interest or business relationships. So this is an additional step compared to the original guidance that is available. And if we can turn to the next slide, please. Finally, I would like to provide a brief summary of the effective dates of the standards. And I know that in the slides we mentioned the ISA, but this effective date also relevant to all the other standards we mentioned with Laura for you today. So the ethics standards for sustainability reporting and the new expert framework as well. So these standards are, or in the case of the ISA, the standards are effective for assurance engagements or sustainability information for periods beginning on or after December 15, 2026, or as a specific date on or after December 15, 2026. And it is important to highlight that this effective date is aligned with IAASB's ISSA 5000 to ensure the interoperability of the standards. This is something that you will hear further in the program regarding the coordination and the cooperation between IAASB and ISBA by developing these standards. During the deliberation of the standards, especially by developing the independence provisions for value chain components, there were concerns from stakeholders around the developing regulatory environment and the reporting landscape in relation to the value chain and the value chain components. And indeed, since the 2024 approval, we can observe changes in the regulations regarding sustainability reporting in certain jurisdictions and areas. And responding to such concerns, the ISBA agreed to provide additional time to support and facilitate market transition to independence regime applicable to value chain components under the ISA. And this extended period can enable the ISBA, in coordination with the IAASB, to monitor the evolution of assurance practices and consider the need for any response in relation to the value chain components provisions in the light of the developments. Accordingly, the ISBA determined to allow the option for a longer effective date for the provisions applicable to assurance work performed at the value chain components, namely in sections 5405 and 5406. And these provisions will be effective after July 1st, 2028. However, there are still some requirements in place if a firm decides to use this deferred effective date. If a firm or a component practitioner that performs the assurance work at the value chain component, this firm should still apply the conceptual framework with respect to that work. Similarly, if the firm intends to use the assurance work of another practitioner, the firm needs to be satisfied that another practitioner is independent. But in that regard, the firm may rely on a statement of independence in accordance with the extent provisions in Part 4B or other professional requirements related to the independence. Plus, the firm still needs to comply with transparency requirements regarding the use of the deferred effective date. And just conscious of time, if we can turn to the next slide. Gabriella mentioned in her introductory speech that since the approval of the standards, the ISBA dedicated significant time and resources to support the adoption and the implementation of the standards. This includes forming of an adoption and implementation working group that are developing proposals for the board's consideration. How can the board help the effective implementation, adoption and implementation, and also the application of the standards? And the first phase of this working group is focusing specifically on sustainability. As you might have seen on the ISBA's website, we have developed several supporting materials focusing on value chain components, focusing on the key differences between the ISA and the extent code. And there are several frequently asked questions that we believe could be really useful material for the implementation and the application of the standards. I would like to also point out that Gabriella mentioned that we have launched an active monitoring mechanism to identify challenges related to the implementation of the ISA. This includes formation of an ISA implementation monitoring advisory group that Liesel is a member of this group. So thank you very much for all your contribution to the work of that group as well. And we are really dedicated to identify such challenges in a timely basis and provide rapid response as soon as possible. Apart from this monitoring group, there is also a dedicated channel on the ISBA's website where there is a possibility to submit any challenges you may encounter during the application of these standards if it has an international relevance. And at the ISBA, we will consider these submissions as well, why we are considering the development of further implementation or implementation supporting documents. And with that, I would pause here. I know that we provided you quite a lot of information in this short time frame, and we are open for any questions from the audience that we can respond today.
Thank you very much to both Sylvia and Laura for that overview, and as well to Gabriella for her introductory remarks. That's been very insightful. I think we'll have time for about one question. So I thought maybe as a departing words of wisdom, you could maybe share whether you've seen any of the other firms or practitioners in other countries that are also in the space where they've just adopted and are now busy with implementation. If there's any early lessons that you can share that might be particularly relevant for our jurisdiction.
Yes, I don't know, Laura, may I start responding the question? And so I think regarding the challenges, as a standard setting board, we are not the first one in the front line who would identify these specific best practices, so to say. I think what I would emphasize that the ethics considerations are work within the ecosystem. So there is the reporting line, the assurance line, and then comes the ethical consideration. So the challenge is really those that are related to the whole process. I can mention the information getting from the value chain and similar topics that we are at the moment getting some views and comments on. But I would really emphasize that the ISBA is there. We are actively monitoring the implementation processes, and we are really dedicated to provide further supporting material whenever there is a need for such information. Apologies, I cannot be more useful in that and provide specific examples, but I think as a standard setter, it is not easy to respond to that question. Now, Laura, you may have anything.
Thank you, Sylvia. Maybe I will just add the great differentiator that is the adoption and the having ethics standards for sustainability, both for the reporting side and for the assurance side. It's mostly because, like we mentioned during the presentation, it's more of a means to an end, and recognizing that we might have the most perfect technical standards. We might have the IFRS, the S1, the S2, who are great standards, the European standards, the GRI standards. We have multiple technical standards applicable to reporting. Then we have ISA 5000 from the IAASB, which is also a very strong and robust standard. But the thing is, we have real people applying these more than perfect technical standards. And if, for instance, a preparer is pressured to manipulate information to misrepresent the alignment with the company's sustainability goals, for instance, in terms of the carbon footprint or the labor conditions, or if the assurance provider is relying again on information that was prepared using data from value chain entities when there was some kind of conflict of interest with the client or other situations, some pressure, pressure from the client, pressure from colleagues. Then again, we have the most perfect technical standards, but then the outcome might be a little bit less than perfect. And this is when having ethical standards and independent standards make all the difference, because it's when we have the gray zones and where both options might seem and are legal per se and are according to the technical standards, but when picking one option over the other is the ethical option versus the non-so-ethical option. And that is really the value added of the IRBA standards for professional accountants and also for the non-professional accountants in case the ISA is applied in the jurisdictions to the non-accountants as well.
Thank you very much for those responses. And I hear you, Sylvia. The standards are very new, and us as well. We're looking forward to learning and growing through this implementation process and sharing through the networks that are available as well what we learn here in the South of Africa. So thank you very much for your time and for your leadership as well from the IRBA perspective in shaping this global ethics benchmark for sustainability reporting and assurance. We really appreciate your work and as well as your availability to come and present here at our event today. With that, I'll thank you and until we see you again soon, I thank you for joining the opening of the program. It's my pleasure to next hand over to our CEO, Imre Nagy, who has led the IRBA since 2021. Imre brings deep regulatory and governance experience, including his work with the Auditor General South Africa, his contribution to the King 5 Corporate Governance Code, and his international role representing South Africa through IFIAR. Thank you for being part of this event today, Imre, and over to you, please.
Well, thank you very much, Liesl. We appreciate the opportunity. So good afternoon, everyone. Thank you for making the time to attend today's webinar, and a special thank you to the presenters. We really appreciate your presentations for the benefit of ourselves and of our members. So it's really exciting to see. I just saw that we have over 150 delegates attending today's session, and for me, this is a testimony to the significant interest in the new ISA 5000 standard and the International Ethics Code that we recently adopted. This is indeed a landmark moment for us at the IRBA and also for the profession and the country, I believe, because when our board adopted the standard and the ethics code earlier this year, it was in January to be precise, we became the first African country to adopt both the standard and the code for sustainability assurance. So we're one of 12 countries that have adopted the ISA 5000 standard globally. And as of last week, I was informed that we're one of 6 countries that have adopted the ISA code. So this is really no small feat for us. We're not a big regulator, and it in fact required a lot of early planning, direct participation, and close monitoring of the international standard boards, both of them, during their development of the pronouncements. This followed the IAASB's issuance of ISA 5000 in November 24, and you can see the turnaround times are quite tight, and ISBA, as recently as January last year, published their pronouncements. So I would really like to thank and congratulate our Standards Director, Sadia, and your team for this achievement. I would also like to sincerely thank our 2 statutory committees, namely the Committee for Auditing Standards, which was chaired by Mr. Zakaria Rashid, and the Committee for Auditor Ethics, chaired by Mr. Sean Davies from the JSE, and their committee members for the hard work and support in getting these standards approved in such close proximity to the release by the international boards. This is indeed a remarkable achievement for us. I do want to clarify one thing though, and that is that the IRBA and its non-executive committees that I just mentioned, as well as our board, didn't just adopt the international standard as is. As I mentioned, the prompt adoption of the standard required careful planning and coordination spanning a period of just over 2 years. In order to ensure that the standard is fit for purpose in South Africa, we published exposure drafts for public comment, which really helped us to consider local amendments and user readiness. And we always encourage all stakeholders to please, when we put exposure drafts out for public comment, to respond. We do take it seriously and we do consider those comments. So the adoption of these standards is a big step for us in response to our own IRBA strategy related to standardizing ESG and sustainability assurance practices in the country. And these pronouncements establish a global aligned and a robust best practice framework for South African assurance providers. We think it will be very helpful, and the fact that we've been proactive is very much welcomed across the profession. At its core, it's at the end about trust, ensuring sustainability information that markets and society rely on is credible, is comparable and resilient to greenwashing, for example. We need true reporting and good assurance so that users and decision makers can rely on the information. It is worth mentioning that South Africa has not yet mandated sustainability reporting standards. And this might have come up and will come up, I think, during this webinar, but CIPC and the Department of Trade and Industry are progressing a market survey and regulatory impact assessment on potential adoption of IFRS S1 and S2. And we are, as the IRBA, engaging very closely with them in that ecosystem. While that system is ongoing, as the IRBA, we continue to also advocate for a legislated reporting framework. And we believe that this will ensure consistency and comparability, supported by a mandated regulatory framework that mandates the assurance standards and oversees all assurance providers. We need a regulatory framework to be legislated. And you may already be aware that there's a gap in our corporate reporting framework in that non-auditors can also provide assurance services. However, these providers fall outside of the IRBA's regulatory scope and mandate. In order to cater for this gap, the adoption of the standards are profession agnostic. It's usable by different types of sustainability assurance practitioners, as is the case, and provided appropriate quality management and ethics requirements are met. So these are core principles that need to be followed regardless of the type of assurance practitioner. And the new standards do bring that to the table. We have already from last year engaged directly with audit committees of listed entities, and we don't regulate audit committees, but we engage with audit committees because of the important work that audit committees do in the appointment and reappointment and assessing of quality and independence of auditors. So we've engaged directly with audit committees and made them aware of this particular gap, and for them to consider the inconsistency when appointing an assurance provider. Also, addressing this gap will require legislative and policy reform so that sustainability reporting and assurance expectations are clear and consistently overseen. For example, extending financial reporting and assurance requirements in the Companies Act to also include non-financial reporting on sustainability is essential. And that is what we are working towards. If I say we, the IRBA, I think it's worth mentioning that the IRBA was appointed to the CIPC's Sustainability Assurance Readiness Working Group, and we are also part of the Sustainability Assurance Cluster. So some progress is being made in this regard, and we are playing our role as the IRBA in that space. What we've brought to the table thus far is on the back of the international standards to adopt those standards and make them available to assurance providers in the country. So in the meantime, while policy is taking shape and be part of that journey, we remain in a voluntary reporting and assurance environment. At least from an assurance perspective, the standard and the code are in place and can be used regardless of the reporting framework that is used. But it is making it a bit more difficult if there's different reporting models, frameworks out there. A fairly recent survey that I came across conducted by KPMG Global, I think it was in 2024, indicated that all top 100 companies in South Africa are reporting on sustainability. And we are aware that many of these companies are obtaining limited assurance, mostly limited assurance on a voluntary basis. So it is clear, it's a clear indication that voluntary reporting and assurance among public interest entities has outpaced regulation. And there's ample academic evidence that shows that ESG factors now play a more significant role in investor strategies and their decision-making processes. So it is becoming more and more important, and it's inevitable that financial reporting and sustainability reporting will be running parallel, and it's running parallel already, but from a framework perspective, it is being strengthened. So in closing, today's launch represents an important step forward for sustainability assurance in South Africa by adopting these standards and the code, and by aligning our work with the emerging national roadmap towards IFRS S1 and S2. The IRBA reinforces our commitment to integrity, accountability, and public trust. As I mentioned, it's all about trust. So both ISA 5000 and the code are effective for periods beginning on or after 15 December 2026, but early adoption is allowed and encouraged. The standards have been issued and can be used. We eagerly look forward to working with you, the practitioners, and also any other stakeholder as we collectively strengthen sustainability reporting and assurance, eliminating greenwashing, and contribute to a more transparent and sustainable future. I thank you, Liesel. I think that's all from my side. I wish you a productive webinar further, but I think there is some time, Liesel, for maybe one or two questions.
Absolutely. Thank you very much, Imre, on that for that powerful address. It's interesting to hear from your perspective as well, you know, what the IRBA's position is around sustainability and supporting the market with the adoption of the standards and making it available for use to registered auditors and others. The chat is quiet, so I don't see any questions for you at the moment, Imre. So I think for the moment, then we'll say thank you. And then we'll move to the comfort break. So for our attendees, before we commence with the second half of our program, we're going to say goodbye to Imre as well as to myself. I will also be greeting you as I hand back to my colleague Ian to facilitate the second part of the program, which will focus on the assurance standards. So we look forward to your return shortly. Thank you very much.
Welcome back, colleagues. I trust that you enjoyed the comfort break and that you are refreshed as we move into the next part of today's program. We now turn to our panel discussion, which will bring together preparer and practitioner perspectives on sustainability reporting and assurance, an area that is rapidly evolving. To this end, it is my pleasure to introduce the host and moderator for this particular discussion, Adjunct Professor Yvette Lang. Adjunct Professor Lang is based at the West University School of Accountancy, where she serves as the coordinator and director of the Chief Value Officer Program, and contributes to research on integrated reporting and integrated thinking. She also consults with accounting for sustainability in technical and education areas. Her professional background includes senior roles at PwC, as well as experience as a technical advisor to the IRBA. Her expertise spans assurance, risk management, sustainability, and non-financial advisory. In addition, Yvette serves in a number of influential roles, including as chair of SAICA's Sustainability Technical Committee, a member of the Integrated Reporting Committee of South Africa, and a member of the IRBA's Sustainability Standing Committee, which I manage. We are delighted to have her lead this important discussion. Yvette, over to you, please.
Thanks, Ian, and good afternoon to everyone. So I have the privilege of talking to two great panelists today that are joining me, and we're going to try and sort of unpack some of what this effective implementation looks like that's been alluded to as part of the earlier presentations. So joining me, we have Shahid Osman, who's a partner at KPMG, and he leads the ESG assurance practice for KPMG Africa. So welcome, Shahid. And then I also have Kavita Pima from AECI, who's the Group Vice President of Sustainability, ESG and EHS at AECI Limited. And of course, very importantly, driving the assurance process in the sustainability area. So it will be great to also hear how that looks on the ground from someone that's experiencing it, I think, as we speak. So welcome to you, Kavita. Would you like to put your camera on? I can't see you yet. There we go. Okay, so
sorry, Yvette.
All good. So no, welcome. So, we've heard already in the sort of IRBA presentation and with Imre's opening remarks that clearly sustainability assurance and all that comes with that is increasing in momentum as we see the sustainability reporting landscape unfold. We're very fortunate to then, as a profession, have these two important standards that become tools to enable this to be done on a sort of robust and quality manner. But we also heard that, there's the technical standards, and then there's what happens on the ground when real people are implementing these and bringing those to life. So I think what we wanted to achieve as part of the session is just to turn our focus away from sort of the technical detail and look a bit more into what this means in practice. So, we've got Shahid, you're going to really bring the assurance practitioner side to life, and Kavita, the report preparer side to life, the one that's really looking to have that information assured to be credible. So I think just some opening remarks from the both of you. We're here to talk about the launch of the standard. So if you think about the adoption of ISSA 5000, which we're yet to hear about from the IAASB, so that's more the assurance standard. And we've heard about this being part of sort of an ecosystem which goes together with the independence and ethics considerations. What do you think, and I'll start with you, Shahid, what do you think the assurance landscape looks like in terms of any changes we foresee with the introduction of these standards, if any, because we already as a country have been quite involved in the space with our companies, a lot of our companies already on this journey. So yeah, if I can ask you just to give some opening remarks on that.
Good afternoon. Thank you for having me today. So I do think the adoption of ISA 5000 in South Africa will result in a step change in how sustainability assurance is done. Up until now, many of us who have been performing these sustainability assurance engagements have been using the ISAE 3000 standard, which is a great standard, but it is quite general, quite broad. So 5000 really brings the specificity, the focus to the current landscape and considers some of the current challenges that practitioners are facing. So ultimately, I do think that the standard will go a long way to ensuring credibility of the information that's reported in the current environment.
Thanks, Shahid. We'll come back to touch on some of those in a bit more detail. But Kavita, I think for you as a representing an organization, a company that's actually reporting on these matters to their stakeholders, with the standard and sort of a new, more specific global baseline type of sustainability assurance standard, what do you think might the implications be from your perspective as a preparer?
Thank you. Thanks, Yvette. And again, thanks for having me as well. I think from a preparer's point of view, some of the main things that really impact us when we report, it's the credibility of the information and the value that we generate for our stakeholders. And that has been growing over a period of time. It's not something new, but with standards coming in, it does help us from a governance and a commitment point of view. So what it does is builds within the company more and more appetite, if I could say, for having the right level of information generated as well as assured. And I think the non-financial assurance hasn't been as prominent as financial assurance in the past, which is where the shift is now starting to happen. There is a much more larger kind of commitment around getting the financials as well as the non-financials assured to give our stakeholders a lot more value generated from a reporting perspective.
Well, thanks, Kavita. So I think both of you have definitely alluded to the value and importance of this process. And so welcome, the adoption of a more standardized approach locally, but of course across the globe as well. I think that's what's also quite important. So I think just delving a little bit closer, and like I said, we're not going to focus too much on technical detail. We're yet to hear from the IRBA, so just to bear that in mind with our audience. But Shahid, I think practically, any specific items that sort of have taken a focal area within the new standard that you'd like to touch on that may look different for engagements performed under ISSA 5000. And I think I'm going to prompt you a little bit already around, we heard about the concept of value chain come up under the ISPA's presentation. So just, any practical perspectives around key concepts, perhaps value chain might be part of your response.
Thank you. Thanks for teeing me up there. So, yeah, I mean, ultimately, when you're comparing ISA 5000 to what's been used, ISAE 3000, 5000 has double the requirements or more than double the requirements. So really a lot more rigor expected on how these engagements will be undertaken. If I call out some specific areas of focus, so risk assessment is really expected to be a lot more granular, a lot more focused, really identifying the specific risk for the information that's reported and in scope in order to be able to respond appropriately to arrive at your assurance outcomes. Another very interesting and important area is this concept of other information. So the other information that's accompanying the scoped in assured information. And again, in a context where you might have specific pieces of information in scope, everything else that's in the sustainability reporting forms part of this other information, which will need to be read and understood. And in a context where your financial statements accompany this sustainability reporting, even your financial statements themselves might form part of this other information. So So real emphasis on other information and ensuring this connectivity that we might hear about sustainability reporting and financial reporting in order to ensure that it really is appropriate and makes sense for users. And then, as you've said, Yvette, the more topical considerations of value chain. Value chain is a tricky concept, and maybe just a little bit of context is essentially you would be reporting as an entity on topics, impacts, risks or opportunities that arise, in your upstream and downstream value chains. So looking into your customer use of products as well as your supply chains coming through. And really the focus here is around resilience and impact, what actually is happening in the broader ecosystem that you're part of. And as you can appreciate, from an assurance perspective, if data is coming in from these sources, there's a lot of scrutiny now and a lot of consideration required around completeness and accuracy, data quality, as well as just the fact that this information is outside of the control of the reporting entity. So you talk about processes and controls and governance. The reality is you might not be able to have that level of oversight and influence over this information. So really quite challenging from an assurance perspective, and opens up the concept of using the work of another practitioner, which, as we've heard already from our IRBA colleagues, that there's some independence considerations. There's considerations around involvement in the work of this practitioner. So a number of topical elements popping up in practice that need to be considered and dealt with, but really refreshing that the standard itself does consider some of these aspects. Thank you.
Yeah, thanks, Shahid. And I know that one aspect that the standard has taken care on, well, to try and attempt to explain more around the difference in limited and reasonable assurance. I'm not going to touch on that now. We're going to, I think, hear more from the IRBA around what they've done in that space. But I think you touched on sort of really an important concept with value chain around systems, controls, governance structures in place. So I think I'm going to move over to you, Kavita, because I would imagine from a preparer's perspective, you need to be ready for sustainability assurance. You're already on that journey as an organization, and perhaps as sustainability reporting becomes more clear in terms of the regulations and the assurance requirements, and with the standard coming into play. From your company's perspective, what's been your journey along the assurance path? And so what sort of systems, controls, governance structures do you think you've strengthened or still need to strengthen in anticipation of the sustainability assurance?
So as a company, ACI has been on the sustainability reporting journey for a long time. So it's not like it's a new thing. It's not like it's something else we have to start preparing for, but it really is about, we've been doing this for a long time. Have we been doing it correctly? Is there anything that we've been missing along the way? So it's more like, let's go back into a bit of a sense check. And frameworks and standards do help, because they sit down and they put down requirements in a very systemized way. So for a preparer, it becomes easy to go through that list and say, okay, we've been doing all these things, but here are 1, 2, 3 items that maybe we missed, or we didn't do it properly, or we need to put in more controls or systems to be able to report on that. So from our perspective, it's more about enhancing what we already have, doing it a lot better, and also making sure that what we do report and what we do provide to our stakeholders is not just commitments and statements, but actual measurable impact. And that is something we've been focusing on for the last few years. It's just not talking about we commit to do this and we want to do this, but how are we going to do it? And in order to reach that end goal, what have we put in place, and how are we measuring that progress? So that's really the journey we've been on. And the standards and framework, they do help us in terms of saying, let's systemize, let's standardize, and let's put in better governance controls, which were there, but let's enhance them even more, because as we've said before, from a sustainability reporting perspective, there hasn't been as much scrutiny and control as with financial reporting. So your financial systems have a lot of control in place. Maybe the sustainability reporting needs to be enhanced. And that is where the standards are helping us to make sure we do that tighter control and enhanced reporting.
Yeah, thanks, Kavita. And I think we've heard two things coming to my mind now. Often we're talking about needing expertise beyond traditional accounting in this space. So either to do the reporting or to do the assurance side of things. We've also heard that these standards have been developed in a profession agnostic way, which essentially means that they can be used by a broader set of professionals, if you like, not necessarily accountants. And that's also, I guess, in the reporting space. So for me, a really important aspect I'd like to just address with you is, the standard allows both accountants and non-accountants, provided they meet quality and ethical requirements. So that's quite clear. But how do you see multidisciplinary teams shaping the future of sustainability assurance, and also the role of external experts, which you touched on, Shahid? So, why is this important that we see a multidisciplinary team? So I'll start with you, Shahid, from an assurance practitioner perspective, and then Kavita, I'm going to come to you as the person preparing and experiencing that assurance.
Thanks. I mean, if you look at the scope of what's being reported, what's being assured, it's absolutely imperative to have the right skills mix. And yes, accountants are super useful in this process, and obviously there's a certain skills and competence that comes with that profession. But the reality is, again, in order to be able to deliver on these engagements, covering a significant diversity and breadth of subject matter, you really need to bring that level of skill and experience. And so multidisciplinary teams are foundational to be able to provide this work and to be able to do it properly. And that's envisaged in the standard, which is really great as well. The reality is these subject matter experts, if we might call them, are not going to be peripheral to the engagement. They're actually likely to be very core to the execution teams, just again, given the type of subject matter that is actually being assured. And that's how we work at the moment. That's what our clients expect. I'm sure that's what Kavita expects as well when providing sustainability assurance, because it's the only way you're actually going to be able to add value, to be able to understand what you're assuring, to be able to have the discussions with the client, because at the end of the day, across the table, there's a client who happens to really know the subject matter as well. And again, on the client side, and I'm sure Kavita will talk to it, you also don't just have a row of accountants preparing this information. So, you really need to match the skill with the client's expertise, the subject matter itself, and think quite carefully about that. You alluded, Yvette, to the fact that we use experts, and in financial statement audit, using experts is quite normal as well, right? So we use actuaries, we use engineers, we even use environmental specialists. The use of an expert here is likely to be, as I've said, more embedded in the delivery team and absolutely foundational to executing these engagements.
And Shahid, Kavita, from your perspective.
And I totally agree with Shahid, and he's raised a few points that are extremely pertinent to us from a company perspective when we're reporting, because not having the right people on the team becomes extremely difficult and cumbersome. If you have to constantly explain to an accountant or a financial person why sustainability is like this, why environmental stats are like this, why a net zero plan looks like that, if they don't understand it and they don't get it, it becomes very difficult. But aside from the fact that you need an assurance team that is multidisciplinary, you also have an internal team that's multidisciplinary. Because when you're reporting into sustainability, it is not just environmental. You've got health and safety, you've got risk, you've got compliance, you've got financial aspects, and all those things tie in together. And if you don't have the right team internally interacting with the external assurer, you're not going to get it to work. So and the multidisciplinary part is extremely important. And I think, as you might be aware, we are currently in our reporting cycle. We've just ended the year in December, and we're busy doing our annual reporting. In fact, just finished with our assurance and doing our page turns with the exco and the board, just giving them the assurance that the assurance was done. That we finished the assurance, that the auditors have signed off, and these are the numbers. You don't get tons of questions. They take it with a lot more confidence. And that gives us also a bigger sense of comfort from the reporting side, that aside from the fact that we've put all this data together, somebody else has come in from an outside perspective, had a look, raised the questions, we've answered them, and everybody's comfortable with what we've now put on the table. So it does add a lot of value. It gives our board a lot of sense of comfort, and they feel a lot more confident going out with these reports and these numbers. But gives us internally as well that same sense of comfort, that we've been going through an annual, a monthly reporting cycle or a process. But at the end of the year, when we assure it, we know it's right, it's correct. We pick up a few errors, we fix them, and then we move forward. So it adds a lot of value.
Thanks, Kavita. So yeah, I think that's very positive that there's value to be obtained from this process, and I think with the right building blocks, and that's what we've tried to explore in a very quick way. So having the right team in place with the right experience, competence, having the standard with a sort of consistency. But I would like to, seeing we launching sort of both the ethics and the assurance sides at our webinar today, just to, as we lead towards the end of our session, competence of the team would be an important consideration as part of the ethics code. So just moving more to sort of that ethics perspective, and Shade, to come back to you, perhaps just to provide some context as to some more practical context, if you like, as to why independence and perhaps some of these ethical considerations the IRBA team talked to us about are particularly important in a sustainability assurance engagement. What has been your experience around that?
Yeah, Kavita mentioned the impact behind the statements, and what's really important is the substance behind statements. We've heard so much today around greenwashing, exaggerated claims. The reality is this space is prone to spotlighting, exaggeration, and greenwashing, and all these other terms that go along with it. And it's really important for the assurance provider, in order to uphold the credibility of the information that's being presented, to be independent, to act ethically. It's great to now have this documented and a framework there to be followed. The reality is it's expected of us, and it's inherent in the work that we do. We would not be able to discharge our responsibility around providing trust and credibility over the information if we're not acting independently and ethically. So just in a nutshell, those are, I think, why this is so important.
Kavita, I think just from your perspective and bringing the ethics really into practice, is there anything that's particularly important for your assurance team, when it comes to how you consider ethical qualities and behaviors and the expectations you have in that regard?
I think from a preparer point of view, again, the independence is critical, because we cannot be reporting externally and having an assurer who somehow is integrally involved with our business. So that independence aspect is highly important, and it's something obviously that our board and our governance committees also examine very carefully, to make sure that the assurance team that we are bringing in has got that independence factor, because I mean, otherwise it's a compromised assurance statement. So really that independence aspect is very critical. And we also try and make sure that the team that is working internally, as well as the team that will be working from the external perspective, don't have personal relationships, that they are not connected to each other in any way, or there can't be any collusion of that sort of thing. But really, because like I said, we've been doing it for a while, we've almost got this embedded. We know fairly well how to do this, how to make sure that there's no compromise, and that we do get that independence factor in very strongly. All of us sign declarations, all of us make sure everything's documented, and it's a very controlled process. And it has to be. It has to be.
Yeah, I think given Shahid's highlighting its importance, Shahid, just quickly, because this could take a bit of time to cover, but you might find in practice that because of the somewhat limited set of skills in the space, that firms could provide both sustainability consulting and assurance services. Is there an potential for potential conflicts to arise in terms of complying with ethical expectations in those scenarios?
There is a risk, and it's the self-review threat or marking your own homework. So it is important to understand exactly what's in the scope that's being delivered or proposed, and how that might interact with your assurance scope. It might be necessary to decline consulting work or assurance work, depending which one came first. But at the same time, that it might be appropriate, and there might be safeguards that can be put in place, like using separate teams covering separate scopes or different subject matter. But then again, one needs to be thinking ahead in the future as well, whether something might come into scope, etc. So it does need to be managed quite dynamically, and it is important. And I can tell you in practice, it is something that we're quite conscious of as well.
Thanks, Shahid. So I'm going to, we've of course only had half an hour. I think we've tried to uncover a few of the sort of on the ground challenges in light of the standards, and I hope that's been helpful for those to listen to. And of course, we could have a longer session as we always say on these things. But I think just to wrap up, perhaps just to ask each of you to give sort of your top pointer for those preparing sustainability reports and or the professionals, of which we have many on the webinar today, doing the assurance and perhaps considering getting involved with the assurance, because it might be something new to many of those on the webinar. So Kavita, perhaps I'll start with you, and then Shahid, just your sort of closing thought around this space from a practical perspective, of course.
Look, from a practical perspective, I think it's so important that we integrate sustainability with business. And I think if you don't do that, that's where you get the separation, and that's where you start becoming isolated or compartmentalized, and you don't get the integrated reporting that you're looking for. So if we make sure that we have methodologies and systems properly explained and embedded, and you integrate it into business, and from a business perspective, it's so important to show the value of sustainability to the bottom line. Because once you do that, you get the buy-in of the business, and you have to get that. If you don't get the business buy-in, you struggle to collect the data, to find the information, to get the projects, to get the approvals. But if they understand the value of that, it really helps a lot. So getting that done, and more importantly, don't make sustainability reporting a burden. Because the moment you add it on top of everything else people are doing, it's like, oh no, this is now another big problem that I have to start. I must appoint more people. Maybe I must expand the team. Maybe I must incur more costs just to do this reporting. So just finding a way to make it integrated, part of business, part of normal operations, that's the critical thing. It's difficult, it's not easy, but it's the thing we have to focus on.
Yeah, and I think once you've done that, the need for assurance becomes so much more clear because of the importance of that. Thanks, Kavita. Shahid?
Just quickly, I would say read the standards. The architecture and the tools are here now. They've been developed very thoughtfully. work collaboratively in teams. You don't need to know all the answers yourself, but you do need to stay curious and ask the right questions. Thanks.
So yeah, I think that's our time, but I really hope it's sort of just given a sense for. I think it's always important to acknowledge as our country and our journey that many companies are already well on their way in this space. So as these sort of global baseline type of standards emerge, it's really just there to enhance and assist us further on our journey. We're not necessarily starting on blank pages. So I think that's always positive to just reflect on. And yeah, I think the real impact is going to lie in how these are implemented in practice, how they're taken up and used as tools as they're meant to be. And yeah, I think my last point, just thank you for sharing so willingly and joining us on the panel. And yeah, I think to the IRBA, well done on considering the standards and adopting those. And yeah, we look forward. I think all of us will be a part of your implementation journey, and we're looking for the successful outcomes that they're able to bring. Thanks, Shahid. Thanks, Kavita. And then I'll hand back to you, Ian.
Thanks
very much.
Thank you very much to our panelists for a thoughtful and engaging discussion and for sharing such valuable preparer and practitioner perspectives. The insights shared underscore both the opportunities and the practical challenges as sustainability reporting and assurance continue to evolve. We now move to the next session on our agenda, an IAASB update on sustainability assurance, with a particular focus on ISSA 5000, the first global standard for sustainability assurance. This session will provide an important international standard-setting perspective and will build directly on the themes explored in the panel discussion. Let me introduce our speakers for this particular session. Our first speaker is Neil Morris, who joined the IAASB in 2023 as a board member. Neil is the Global Head of Assurance and ESG Methodology at KPMG and brings 24 years of professional experience across South Africa and United Kingdom. He is a chartered accountant and a registered auditor with deep expertise in risk management, sustainability, financial audit, and assurance. Joining him is Claire Grayston, who joined the IAASB in 2022 and currently leads sustainability assurance at the IAASB. Claire co-led the development of ISSA 5000. Prior to joining the IAASB, she led audit and assurance policy at CPA Australia and spent nearly a decade at the Australian Auditing and Assurance Standards Board, specializing in assurance standards related to sustainability and emissions. Claire has also worked as an auditor and forensic accountant in Australia and the United Kingdom and is a fellow of Chartered Accountants Australia and New Zealand and CPA Australia. Neil and Claire, over to you, please. Thanks.
Thank you, Ian, and good afternoon to everyone. I really appreciate you including the IAASB in this webinar. I think let me just start by firstly saying congratulations. It's a real milestone to have approved ISSA 5000 and the relevant ethical standards for adoption in South Africa, and an incredible step forward, which I think will provide a leading position for others to follow, and we'll talk through some of those shortly. Let me dive straight in. So if we can go over to the next slide, Rudolf. Firstly, let me just talk through what some of those drivers were for the development of ISSA 5000. We obviously had 3000 as a standard, and it was working perfectly well. Right? There were many assurance providers using 3000, and so you might well ask, why did we need to develop a new ISSA 5000 standard for sustainability reporting? And quite simply, there was an increasing demand for reliable sustainability information. There was growing mandatory assurance, particularly we see in Europe where there's mandatory assurance. And some of the existing IAASB standards like 3000 lacked the specificity that you'd look for to be able to consistently deliver across a wider group of practitioners. So 3000 was working okay, but it was a narrow group of practitioners that was using it. They could apply their judgment and experiences. Perhaps they could use the existing IAASB guidance as well, the EER guidance, which was really helpful, but it wasn't authoritative. And so as we see this growing need for mandatory assurance and for voluntary assurance across a broader set of markets, and we see more practitioners, we needed something to be more specific. And that's how ISSA 5000 came along. So there was an urgent need. We had to be able to build this quite quickly, but we could build it fast because we had 3000 as the base. We had the EER guidance as a base, and led by Claire and Dan, we had a really good team that was building the standard itself. So it was only approved as a project in 2022. And by standard setting timelines, we had it approved and issued in 2024, which is at an incredible speed, as I said, for standard setters to be able to approve. So it really has now provided the solid foundation for us to move forward with sustainability becoming a topic which is more broadly applied. If we can go over to the next slide. So, what have we been doing since? So first of all, it was approved in September 2024. It had a unanimous approval by the board, which was really exciting. Following shortly afterwards, in November of 24, the IRBA provided their certification of ISSA 5000, essentially confirming that the due process had been followed. Remember, it's really important that the due process is followed so that other jurisdictions can adopt it, knowing that it had been developed, it had been exposed, it had been considered, and then finally voted and published. In January 25, we launched 5000 and a whole number of other final publications to be able to support the implementation. And we're continuing to work on some of those publications as well. We're now in a phase of adoption and implementation, exactly what South Africa is doing, actually, adopting it and now seeing how that implementation works. So we are working with practitioners, trying to understand any implementation challenges that they may have so that we can then respond to those. There is early adoption permitted. We've seen Australia actually early adopt ISSA 5000, and they would be the first ones using it already on their December 25 engagement. So that was really early for an adoption. Essentially, we would see that as for periods beginning on or after 15 December of 2026. So really for the first time, you'll see the main uptake of ISSA 5000 for your December 2027 reports. So there's been a really nice, good lead time for everyone to be able to update their methodologies, determine what their approaches would be, and then apply it responsibly when the effective date comes along. If we go over to the next slide, there are a few things that I wanted to highlight here. I mean, the key for me is that there are 4 parts to being able to create this ecosystem that you're going to be having from a sustainability reporting perspective. So we would have firstly seen that there's been a lot of fragmentation when it comes to the actual reporting frameworks. We're seeing some of that stabilizing now. But it's really important that you need to have a suitable sustainability reporting framework. The ESRSs, ISSB, the GRIs. That doesn't mean to say that you can't have entity developed criteria. You certainly can. That still is allowable within the standard. But we will see that getting suitable sustainability reporting frameworks in place will be a key driver around consistent, high quality reporting that this area has really needed. So the reporting framework is the first key pillar of the process. We can then talk about assurance under 5,000. So we've got a clear principle-based set of requirements, and we're looking for this to then be consistent, high quality performance, and it's going to cover limited as well as reasonable assurance. And it's underpinned by quality management. And for an audit firm, that would be your ISQM quality standards that would be applied. Next key piece, as you've already covered on the webinar, is you need ethics and independence under the IRBA code. It's robust ethics and independence required for both sustainability reporting and assurance. You could use something else in some markets, but it needs to have the same level of requirements as you'd see in the IRBA codes. And then the last piece is that you need to have robust oversight by empowered regulatory authorities, as you do in South Africa with IRBA. Having all of those four pieces in place, the reporting frameworks, the assurance standards, the ethics and independence, and regulatory oversight, really now does provide this ecosystem that will allow for high quality, consistent sustainability reporting, which is exactly what the markets would be looking to South Africa to produce. You really don't want to be in a position where users of your information internationally would be looking at information and saying, well, they're not really following this framework. They're not really using this standard. I'm not sure about the ethics and independence. They don't actually have oversight by a regulatory body. So I'm not sure if any of this really matters. And those are the key ingredients that South Africa has got in place to provide this strong, high quality global sustainability reporting that other communities can really know, like, and trust. So let's go over to the next slide. We can talk through a little bit around what ISSA 5000 encompasses. So firstly, it applies globally to sustainability information. And I've spoken enough already around having a suitable reporting framework. It could be fair presentation and it could be a compliance framework. Okay? So both of those frameworks are most certainly allowable. It covers both limited assurance and reasonable assurance engagements, and those differing requirements are very clearly identified within the standard. So you'll know very clearly as to, well, that's a limited assurance requirement, it's a reasonable assurance requirement, and if it hasn't been specified, then you know it's applicable to both types of those engagements. It's important to understand what the reasonable requirements are. I find it useful because limited assurance is something less than reasonable. So if I've got an understanding as to what reasonable is, then I know that I can do something less, which would land me in that limited assurance space. Loads of judgment for limited assurance, and that certainly continues to be a theme within the standard. It's available to assurance practitioners whose firm have a system of quality management in place and applying the relevant ethical requirements. Doesn't have to be an audit firm globally. That's going to be dependent region by region, but certainly you need to have the right systems of quality management and the ethical requirements. 3000 had a bit of a dependency on understanding some of the auditing standards, so you could refer back to those. This standard's standalone. It's important that it's standalone so that all practitioners can use it. We obviously do go back to the ISQM standards and the IRBA codes. So those standards we do need to go back to, but in terms of the auditing standards, it's a standalone standard. Everything you need should be in 5000 and the application material. And it covers from the beginning, so from acceptance all the way through to reporting. In fact, the preconditions would even be in those stages as you're considering whether you'll be accepting the engagement. Some markets would have assurance over all sustainability information, and some markets still developing, or in voluntary markets, you would have just specific information. And it's scalable to be able to deal with that. I think if you're doing an assurance engagement over specific information, just make sure that it's appropriate. There's enough information and you haven't been used as an assurance practitioner to give us a veneer and a gloss. I think also important, if you're only doing specific information, to clearly identify what the information is. It can get lost in a sustainability report, and the standard's going to ask you to make sure that it's clearly identified in your report and the preparer's report, so that we know what information has in fact been assured. We spoke earlier that it provides more specificity, right? So it covers off more detail than what 3000 previously had. And then it covers the scope of 3410. We'll talk just now, 3410 is no longer needed. And so that's been removed as a standard on the effective date of 5000. Principle based. So we've used the ISA standards to be able to inform our drafting of 5000. If we go over to the next slide here, you'll see how 3410 is no longer applicable. So what we see here is the standalone standard. I'll emphasize the effective date again. So for periods beginning on or after 15 December 2026. So most commonly going to be for December 2027 year-end engagements. Maybe we'll see future ISSA standards, depending on what the market needs, right? So this could just be the general requirements, and there might be a need for further standards in the future to be able to support sustainability assurance. And so we've made this available as an option. There's no standard currently under development. At the moment, we're just working with the adoption and implementation, and you'll just see some guidance coming out from the IRBA, but we'll certainly keep an eye on whether there's a need for further standard setting in this space. If we think of the other standards, so ISAE 3000 continues, but it's no longer applicable to sustainability assurance engagements. So it's for other assurance engagements, but no longer applicable to sustainability assurance. We've withdrawn ISAE 3410 on greenhouse gas statements. All of those requirements are now embedded in 5000. And there are other ISAE standards like 3402 for service organizations. Those continue to exist in that space. So that's where we are in terms of the standards. I think a key thing to highlight, so some of the important reminders around 5000. You need a three-party relationship, would be the one standout thing. So you obviously need a practitioner, you need a responsible party, normally that would be management, and then you need intended users. I think sometimes we see intended users as the responsible party as well, but you'll need another intended user as well. Otherwise, you don't have that three-party relationship coming through. Appropriate underlying subject matter, suitable criteria. We spent a lot of time on the suitability of criteria. You got to go and get the sufficiency of that audit evidence. It's a very judgmental space for those of you that are getting started for the first time. The evidence may look a little bit different to what you've been experiencing in financial statement audits. And then you've got a written assurance report at the end of it, and we've got some examples and further guidance to be able to help people. It's not an internal audit. It's not a consultancy engagement. It's not a readiness assessment. Those are all others that probably wouldn't have that three-party relationship. But 5000 is very much for assurance engagements only. Let me turn it over to Claire, and she'll take you through some more detail of 5000, and in particular, comparatives to 3000 in the first slide.
Thank you so much, Neil, and it's fantastic to be here to talk about the launch of ISSA 5000 in South Africa. So congratulations from me. So yes, I want to talk about these key differences between 5000 and 3000, and that's because we're going to be seeing firms transitioning. We are seeing firms transitioning from applying ISAE 3000 to applying ISSA 5000 to sustainability assurance engagements. And certainly we're seeing that many firms globally developing their methodologies for ISSA 5000. And so just giving you a bit of a flavour of those key differences. Now, as Neil mentioned, ISAE 3000 as well as revised, as well as ISAE 3410 were used as a basis for 5000. They were the starting point. But I would flag that we also did pull in many of the relevant, all of the relevant concepts from the international auditing standards. And that was because those concepts did reflect the more recent thinking of the board. And also we wanted to make sure that the sustainability assurance engagements were directly and easily comparable, if you will, to the to auditing the financial statements, as they will be presented in the future, in many cases, in the same annual report. So although we see that ISSA 5000 result is very consistent with the approach in 3000, and 3000, as Neil noted, has been successfully and effectively applied to perform such engagements up to now, along with greenhouse gas statement assurance under 3410, to address that specificity that we needed. Certainly, bringing in those other concepts there are now some differences. And because it's standalone, we certainly weren't locked into being absolutely identical with the way that 3000 expressed the requirements. So I'll just run through some of these differences. First of all, with respect to estimates and forward-looking information, there weren't any specific requirements in 3000. And so because those reporting concepts are really critical to sustainability reporting, and 3000 broadly, covered those. I mean, it was possible to do assurance on estimates and forward-looking information under 3000 because it's an umbrella standard. That it was it's not going into a lot of detail. So 5000 requires estimates and brings in the latest. Sorry, has requirements around estimates specifically and brings in that latest thinking that of the board in ISA 540 revised. And this also is the basis for the forward-looking information requirements in 5000. 3410 did include some of that, and there was guidance that we looked at from the EER guidance that was in place. That tends to refer to estimates and future-oriented information, but of course that's aligns with forward-looking information. So that is estimates of forward-looking information is addressed very specifically in those requirements and what needs to be done in relation to those types of disclosures. Groups and value chain were not specifically addressed in 3000 either, and because value chain components, including other entities in the upstream or downstream value chain, information from those entities may be incorporated into the sustainability information, depending on the framework, then this is quite a unique situation as compared to financial statements. So there was no direct focus on this sort of type of information in 3000 as an overarching standard, so that has now been brought into 5000. As in the same way as groups has been brought in to 5000 as well, because we're seeing, and certainly many of the initial sustainability reports of the larger entities will for sure be group entities in many cases. So certainly our stakeholders were asking very strongly for groups and value chain to be covered off, so that has been done. The third area was risk assessment and understanding controls for limited assurance engagements. So the risk assessment is not specifically required under 3000, although of course a risk lens still needs to be applied under that standard. But that understanding of the subject matter and engagement circumstances that's addressed in 3000 is now really explicit in 5000. As it requires a risk assessment for limited assurance engagements, but at the disclosure level, not at the assertions level. And this also helps to narrow that range of assurance that is being provided by a limited assurance engagement, helps that comparability between engagements, and helps that understanding for practitioners as to the work effort necessary in those limited assurance engagements. It also does align very neatly with 3410 and the experience that practitioners have been applying there, which does require a risk assessment as well for limited assurance engagement. So it will fit neatly with what practitioners are familiar with under 3410. With respect to controls, 3000 does have requirements around considering the process used to prepare the sustainability information and obtaining an understanding of internal control over the preparation of the information. But 5000 is more prescriptive with respect to which control components are considered for limited or reasonable assurance engagements, and there's some differences there between limited and reasonable assurance. And it, again, more closely aligns with 3410. Engagement team versus using the work of others. So this is an area we did spend a lot of time on in developing 5000. And the key difference from 3000 is this focus in 5000 on sufficient and appropriate involvement in the work of other individuals in determining whether those individuals are part of the engagement team or not, and that they're being used, their work is being used in another way as another practitioner, as defined in 5,000. So 3,000 does have requirements around using the work of others, such as practitioners, experts, and similar to 5,000, but there's just more extensive requirements in 5,000 and greater clarification. So 5,000 also brings in this notion of a one-to-many report, particularly for value chain information. It's very similar to those of you that are familiar with the ISA 3402 engagements on controls, but in this case, a one-to-many report can be on the sustainability information itself. It could be on controls as well. So a report prepared by another practitioner that is useful to a number of practitioners up or down the value chain. Another area of difference is the connectivity that is addressed directly in 5,000. By that I mean the connectivity with the financial statement auditor, and it's certainly encouraged in 5,000 in the early stages of planning the engagement to, with the consent of the client, to reach out to the financial statement auditor, and it does require communication with the auditor if there is other information, other financial statements, and if there's any material inconsistencies, for example, that the practitioner identifies. So really encouraging. We certainly expect over time there will be, this connectivity is going to become increasingly important as financial statements and sustainability reports are presented together, and they become other information for each other's work. So the work efforts for preconditions, that was clarified further in 5,000, and very much ensuring the work effort wasn't excessive was just enough to decide whether or not to accept the engagement, and allowing, for example, where there's framework criteria, where there's a sustainability reporting framework that is a framework developed by an appropriate authority, that can be presumed to be suitable criteria and should have that engagement should have a rational purpose. So that helps sort of the understand the work effort needed for preconditions. And finally, I'll just mention materiality. In 3,000, materiality needs to be considered, but in 5,000, we have this bifurcated approach, and that's to allow for the different materiality for qualitative and quantitative disclosures. So 5,000 requires consideration of materiality for qualitative and determination for quantitative, and that's really just a practical issue around what's really possible for those different types of disclosures. It also does touch on the entity's process to identify the sustainability information to be reported and double materiality, both of which can be required in, under certain frameworks. So we'll move on to the next slide, please. So just touch very briefly on, I mentioned earlier that need for, equivalency or comparability between the sustainability assurance engagement or the sustainability assurance report and the financial statement audit or review engagements or reports. And, as depicted on this slide, firstly, I mentioned before that those fundamental concepts, we have pulled a number of those in from the auditing standards, and to have that sort of consistency of concepts across both types of engagements. Reasonable assurance should, align conceptually with audits of financial statements. Limited assurance should align with reviews of financial statements. Ethics, there's the ethics under Part 5 of the code, the ISA, which you heard about earlier, is equivalent to Part 4A of the code for audits and reviews, so having that consistency there. And quality management underpins all of those engagements, whether sustainability assurance or financial statement audits or reviews. So that equivalency we see is really, really important for the market in understanding what's produced under or provided under the sustainability assurance report. Reports. Next slide, please. So I just wanted to touch on how ISA 5000 can provide or does provide for those robust assurance engagements before I hand back to Neil. So it provides this, because of that transparent due process that Neil mentioned, we did global outreach, we got a record number of comment letters, and we continued in continuous engagement with stakeholders in developing the final standard. That provided a really strong basis for a consistent sort of high quality sustainability assurance engagements to come out of 5000. So, and sort of the key aspects that are aimed at ensuring that consistency and quality is compliance required with all requirements of 5000. The requirements for the practitioner to have the necessary competencies. For the leader, that's the competencies in assurance skills and techniques, and sufficient sustainability competence to take responsibility for the assurance engagement, and for the team and practitioners, experts to collectively have that competency. The communication with the financial statement auditor being there, that I mentioned earlier, so to understand if there's cross-cutting issues between the engagements, and providing that level playing field so that all practitioners, whether accountants or non-accountants, are going to be providing those engagements under the same standard and using a consistent approach. So now I'll hand back to Neil to carry on with the benefits of adoption. Thanks, Neil. Next slide, please.
Thank you, Claire. I mean, look, what are the benefits of adoption? I'm sure, these are all things that you would have considered during that process, but it absolutely is the fact that you are now participating in the global baseline for what is expected of assurance. I mean, I think for emerging markets in particular, making sure that you're maintaining this global baseline of assurance would be really important for how the information is considered by investors globally, etc. So that for me is the key driver. I think when I think about emerging markets as well, I do feel like not only do you need this financial performance, you need a really strong sustainability performance, and that sustainability performance is always questioned without it having appropriate assurance over it, and making sure that you're using the latest standards, I think, would be really important. So, absolutely, you're now participating in this global reporting ecosystem, as we've spoken about before. It's going to be driving high quality, robust assurance that is going to enhance that trust and confidence in the information that we're putting out. We're putting it out in a few capacities. You may be a supplier through to an entity that has reporting in their jurisdiction, and having that interoperability will be really, really important. And as I said, we may be in a position looking for local or international investors, making sure you're using the same global standards enhances that trust and confidence. When we look, I think it's important that it prevents this regulatory fragmentation and the interoperability that I spoke about. When we engage with firms, those firms want to make sure that they have global methodologies with as few changes as possible across their global networks, so that they can consistently deliver high performance sustainability or financial audits for that matter. As soon as you've got these differences, you get inconsistency in how things are trained, how things are regulated, and it creates lots of confusion. Just a wording change here and there can make things a lot more difficult. Let's go over to the next slide, and we can have a look at what the adoption looks like across the globe. So South Africa is not alone. That's the important thing. And there are 12 other countries that have already adopted. For those auditors, if you added up those that have in fact adopted, you'll see that there are only There are only 12 that have adopted. The 13th now is New Zealand, which isn't noted on this slide today. That's been sort of a recent addition since we submitted these. So there's some really good traction that's on the go at the moment. And I think it's so important that you get these leaders to be able to set what's going to happen within their jurisdiction. So if I touch on a couple of the jurisdictions, you'll see that in total on this map, there are 54 jurisdictions. So there are 12 that would be highlighted here as having adopted. There are a further 27 countries that are in the process of adopting. It can take a little bit longer in some parts to be able to adopt because it needs translation. So Saudi Arabia would have been an example where they were responsible for the Arabic translation, so that then took them a little bit longer. Once they got the Arabic translation in place, they could then adopt it. Other Arabic states now are able to use that adoption and then begin their adoption processes. So it's not always as sort of simple as, oh, that's a great standard, let's just adopt it. There are some further processes that need to take place. So 54 in total that are currently looking at it, 27 in process, and 16 under consideration. I think it's important for me to touch on sort of Europe. So let's talk about Europe as a particular area around adoption. Many of you might have known that the European Commission has put a request to the IRBA for them to draft a limited assurance standard to be used in Europe. The expectation is they've been instructed to use ISSA 5000 as the baseline, and they'll make some additions and refinements for specific European purposes. And the extent of those changes is currently being deliberated by the CEOP. So they'll be building out that standard over the next number of months, and we will be working with them, as I'm sure many of your firms might be providing their thoughts and insights through the CEOP as well. That in itself would be 27 entities. Now, having a global standard without Europe would be disappointing, and so it's tough for it to be global without them. So really important that we stay close and work with our European colleagues to get that adoption in place. But having said that, there are individual countries that are already in process for adopting ISSA 5000 because they may be able to use 5000 outside of just CSRD engagements. And so when you look across, in progress is Czech Republic, Finland, Germany, Norway, Sweden, etc. Still under consideration is Austria, Croatia, Denmark, France, Iceland, the Netherlands, Portugal, and so Spain, Switzerland. So you'll see a huge number of European member states that are considering adopting the standard in their individual right in any event. Some of you might be doing lots of work with the UK. I know that's a common trading partner for you, and the UK has in fact adopted ISSA 5000. So that's a really important entity for many of you. When I look from an Africa perspective, or an Africa and Middle East perspective, Saudi Arabia, South Africa, and Zambia, those are our front runners for getting this adoption going on in Africa and the Middle East. But Ghana, Kenya, Nigeria, Qatar, Rwanda, Turkey, Uganda, and Zimbabwe are all in progress with their adoption. And I have no doubt that South Africa's adoption will stimulate them and others to be able to progress their adoption. When I look across to Asia, Australia, Hong Kong, Malaysia, Pakistan, and the Philippines, those have adopted, as well as Sri Lanka. And in progress, China, India, Japan, New Zealand now has adopted, Singapore, South Korea, Thailand, those are in progress. The Americas are a little bit more different. The US has published recent standards related to assurance as well. They're out for exposure. They won't necessarily be adopting 5000 in their own right. They have their own standards, but it's been very influential in what they've been considering as they've been updating their both assurance standard and their sustainability standards. So keep an eye out on the US standards, but hoping that those would be interoperable for us as well. Claire, I'm going to provide it back over to you to talk through some of the further implementation material.
Thanks, Neil. So yeah, so given this widespread global adoption that we're seeing occurring, how do we, as the IRBA, support that effective and consistent implementation across all of these jurisdictions and firms and practitioners within those firms? So first of all, I'd say that, and I'm going to talk through how we're doing that, but the benefits of that implementation is as Neil was pointing out earlier, that those assurance reports can be comparable and easily understood across jurisdictions. And that's going to be really critical, you know, with minimising burden and enabling that interoperability so that the assurance reports are not just used for one purpose, but can be used for multiple purposes and fed up the value chain, for example, as needed. So I'll move on to how we're going to assist in that implementation. So next slide, please. We've actually published a lot of resources already, and so you can actually go on to our website and look at our focus page for sustainability assurance, and you'll see and can access all of those resources. And we've listed those on this slide. I won't go through every single one, but just sort of highlight some of those for you. And I've grouped them on this slide into the high-level resources. Now, they're really resources that are giving a bit of an overview of the standard, and that's more targeting users and preparers, for example. But the more technical publications that are targeting the regulators and the practitioners, you'll see listed there, and those are the ones that we're really focusing on now and continuing to develop, and as well as the webinar. So the two really, what I see as the critical implementation resources that I commend you to look at is the ISO 5000 implementation guide. Now that's comprehensive end-to-end. By that I mean covers the entire standard. It provides examples, it explains the concepts. It gives you a lot of really rich resources there for implementing ISO 5000. And then I would also highly recommend looking at the technical webinars. Now they are available as a 3-part series, available on demand. The presentation slides are also available, so you know they can be adapted, used locally to develop local materials. But certainly those webinars can be run for stakeholders very easily, and they're available on our website. And so there's a whole range of other resources listed there that we have got available on there. So do look on our website to see those. Next slide, please. So continuing beyond those resources that are already available, how are we planning to continue that effective and consistent implementation support for our stakeholders? And I want to mention a few mechanisms that we have in place. First of all, we have an ISO 5000 technical implementation contact group, and I'm glad to say that we've got Neil is chairing that group, and those practitioners in that group are from the largest accounting firms and other professional firms. So there's 12 firms represented across the globe. Those firms that are conducting and preparing their methodologies to conduct sustainability assurance engagements, and they're building on their experience from 3,000, and they're starting now to conduct those engagements under 5,000 in jurisdictions such as Australia, and they're providing us with their insights of the implementation, queries, challenges that they're encountering, so that the idea is that we can then develop materials as to what the consistent approach to dealing with those is, so that each jurisdiction doesn't go off on their own, coming up with different resolutions to how that should be addressed. We also have an online submission form where any stakeholder can submit queries or issues to us, so that we can look at developing materials for those. And we have ongoing outreach with stakeholders, such as this webinar, other presentations, other meetings with specific stakeholders like IOSCO, IFIA, and so forth. So in response to those, we work with our Sustainability Assurance Implementation Working Group, which is a group of board members and a TA that advise us on the materials to be produced and what the resolutions are. And right now, what we're focusing on is frequently asked questions. We'll be publishing some frequently asked questions on materiality very soon. And we're also going to be developing a number of FAQs on other queries that cover off issues or queries throughout the assurance engagement. And we do also plan to issue some more joint FAQs with IRBA because we work closely with IRBA and we have done throughout the development of our SAE 5000. So we continue to monitor and produce resources. So next slide, please. So in this final slide, before we take questions, I wanted to just give you a feel for the kinds of issues that we're hearing. That's been informing the materials that we developed, and a number of these issues have already been addressed by those materials. So we've been seeing relevant ethical requirements has popped up. So which part of the code to apply, how is it at least as demanding, and certainly always, of course, work with IRBA in addressing any of those queries that have arisen. And we do already have some joint FAQs with IRBA in this regard, and we've also helped to clarify that in our webinar series. Materiality, and it's a very complex area, and as I said, we are soon to be publishing some FAQs on materiality, how materiality applies in a narrow scope engagement. How do you aggregate findings to identify what's a material misstatement when there's disparate disclosures? A lot of these questions that are arising around applying materiality. The third area that's been popping up is those differences between limited and reasonable assurance, such as, some questions have come up around the work effort on estimates. Again, we've sought to address those in the webinars, highlight areas in our implementation guide that help the understanding of that. Another area is evidence. Evidence gathering is obviously quite more challenging for sustainability assurance than what we're familiar with financial statements because of that value chain components, the extent of estimates and forward-looking information may be greater. And we covered that quite extensively in our webinars. So again, I commend you to looking at those, recommend you go and look at those webinars to get some of those answers if you have queries on evidence gathering. The connectivity that we've spoken about already, and we've sought to clarify those areas, particularly in our webinars. The differences between 5,000 and 3,000 that we talked through earlier, they are also covered in the webinars in more detail if you want a bit more information on that. And assurance report content, comes up often, and we have issued a set of illustrative assurance reports to help practitioners through some of the queries that they've had around how to report on some of the matters, such as emphasis of matter, other matters, inherent limitations, or other disclosures that might be needed, fair presentation versus compliance, conclusions, and so forth. So now I'll hand back to Ian with any questions that you might have, and maybe we'll move to the next slide for that. Thank you.
Thank you very much, Neil and Claire, for a highly informative and insightful presentation. We appreciate you taking the time to share the IAASB's perspectives and to walk us through the development and application of ISSA 5000. Your insights are particularly valuable as jurisdictions, including South Africa, consider the practical implications of sustainability assurance. We'll now move into a short Q&A session with you, with both our speakers. My first question for Neil and or Claire is, how challenging will it be for firms to move from applying ISAE 3000 as well as 3410 to applying the new 5000 standard? In particular, what should firms be thinking about in terms of readiness and transition?
Thanks, Ian. I'm happy to take that. I think firstly, the firms are going to have to adapt their methodologies and perhaps the technology that they have to be able to support the implementation of those methodologies. I do engage with a number of firms as we go around and we understand our implementation. And I know that those larger firms certainly are already working on their methodologies and technology to support it. What I will say, though, is that 5,000 is based on the same fundamental concepts of 3,000 and 3410. So the practitioners and the firms that are already familiar with 3,000 and 3410, where they've got a really robust methodology in place to deliver those standards, I think we're just looking for some specific areas that they'll need to enhance to be able to get that more consistent application. We know that 5,000 provides greater specificity. And so where your judgment's been available to apply, if your judgment has led you down a certain path, but 5,000 is now more specific, you may now need to tailor that methodology and your technologies to be more specific, that this actually is the piece that needs to be applied and how it needs to be performed. Overall, someone with a robust 3,000 methodology is just a bit of a step change. And I think the timelines will really allow them to be able to achieve that.
Thank you, Neil. My second question relates to skills and competencies. How can we be confident that firms will have or will be able to develop the combined skills and competencies required across both assurance and sustainability to apply the new 5,000 standard effectively?
Yeah, no, happy to take that as well. I mean, it was probably a similar question that was taken on by the panel that was speaking just before us. And I mean, the first thing that I would say when I began working in sustainability, what I loved was the fact that multidisciplinary individuals are now part of the team. And as much as I enjoy working with accountants, it was fascinating to also have engineers on board. It was fascinating having economists to come and help us understand what the value of something is, the social scientists, the environmentalists. And so what I felt is that I was confident that it made the firms more attractive. It certainly felt that the business unit that was delivering sustainability was a more interesting and exciting place to be than those that didn't have these multidisciplinary teams. So how can I be confident? Well, I'm confident because I've seen it work so well and I find it attractive. And I think if others understand how attractive it is to have these multidisciplinary teams, they'll do it. We know that you need to. You can't go in and have conversations without knowing the subject matter. As smart as the accountants all think that they are, they're never truly going to be able to understand the subject matter in sufficient detail to be able to deliver a robust engagement. So we've got to make sure the standard's going to ask for it, the ethical requirements are going to be putting pressure on it to make sure that the engagement team collectively have the necessary competencies. And I'm confident that the firms are professional in that manner. They know that they won't be looking to deliver engagements where they don't have the competence to do so. So if they haven't already done so, they'll be focusing on skills and competency in sustainability, but also focusing on the subject matters, making sure that because 5,000 is built on ISO principles, 3,000 principles, I think they can spend their time learning GHG, environmental, health and safety, and other social and governance indicator subject matters to be able to get themselves up to speed.
And Neil, if I can add to that, of course, where there's a specialist area, they can always engage an expert, can't they, to, bring in a specific skill needed for that engagement.
Yeah, absolutely. Yeah.
Thank you, colleagues. And then my final question essentially focuses on the reporting landscape. How does the new 5,000 standard address circumstances where a sustainability report is prepared to meet both a reporting framework and a regulatory requirements?
Yeah, I'm happy to take that, Neil.
All right.
Yeah, thanks, Ian. Yeah. So, look, I think it's quite, common that there might be multiple criteria, multiple frameworks that need to be covered off, maybe some regulatory requirements as well as, the sustainability reporting under the particular framework. So, and that's certainly accommodated in 5,000. And the report, the Sustainability Assurance Report, can set out the assurance conclusions for both of those parts of the sustainability information to accommodate the framework or the regulatory requirements. So that can be presented, throughout. There's a number of ways that it can be presented. It's fairly flexible in the standard, as long as each part of the Sustainability Assurance Report covers off the needs of those two sets of criteria. But otherwise, if the regulatory requirements relate to something completely separate, they can be presented in a separate section of the assurance reports under appropriate headings. So, and we do have placeholders in the illustrative assurance reports that you find in ISSA 5000 in the appendices. You'll see in a placeholder for a section on report on other legal or regulatory requirements. If it's not specifically sustainability information, that can be put under that heading or similar heading.
Thank you so much. Thank you once again, Neil and Claire, for your responses and for engaging with these important questions on 5000. In the interest of time, I will now hand over to our IRBA Director Standards, Sadia, for the closing. Thanks, Sadia.
Thank you, Ian, and thank you to the IAASB team. As I was considering this responsibility to thank everyone, it seemed like I was giving an Oscars acceptance speech. So the first thank you is to the 150 odd people that were on the call during this webinar. Without you, a webinar is simply a video. I hope that you had engagement off camera and with your colleagues while you were listening in, but it also assesses the growing or sustained interest in this topic. A round of applause for our headline presenters. The ISPA team reminded us about the adoption and adoption is an important step, but only the first step. It must be accompanied by good implementation. Our panel discussion, hosted expertly by Prof. Langer, brought to life the technical standards. There are hidden gems in that presentation, such as integrating sustainability into business is needed. Shahid said, read the standards and stay curious. And of course, there was a highlight in this conversation about the value of international standards and the need for appropriate competence. The IAASB team, I'm not sure if everyone's aware, but they're actually presenting before their own board meeting in New York at a very early hour. So a true thank you for the dedication to the topic. And your presentation really broke down the 5000 standard into simple terms, how it has been constructed, how it compares to 3000, and of course, the rich information that's still to come in adoption. Finally, but most importantly, to the IRBA team, our first thank you is to our CEO, Emre Nagy. Every time we have a standards webinar, we ask Emre if he has some availability, and turns out he doesn't have availability, but he manages to move his commitments and give appreciation to the standards webinars and highlighting adoption for not just standard setting in assurance and ethics, but really the impact in the South African environment. Emre, Ian has been the man of the hour. He's done the overall arrangements and setting up the webinar. Liesl, you have expertly done some co-presenting. But behind this webinar is not just hours in preparation in the webinar, but actually 2 years of work that has been largely held by Ian and Liesl. These standards have not been developed easily, but they've also been developed in record time. This has also put some pressure on us to adopt in record time. Ian and Liesl have been supported by subject matter task groups, a sustainability standing committee, the Committee for Auditing Standards, and the Committee for Auditor Ethics, and of course the Management Committee of the IRBA, and the board processes. So adoption hasn't just been on one person, but has taken a lot of time and a lot of insights. But adoption again is our first step. So look out for the next steps. What you can expect is a recording of this webinar being made available, as well as our usual webinar highlights document that will be on our website as soon as possible. Thank you so much for attending. And I hope you share this with your colleagues that haven't been able to make the call. Thank you. Bye.